Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Monday, August 26th, about 6 a.m. Central Time. Overnight, the precious metals are higher after Friday's explosive move following Fed Chairman Jerome Powell's speech at Jackson Hole. Looking at December gold, up $13 at $25.59, close to the high end of the range right now. December silver up 33 cents at $30.60. One last quote on September silver, up 32 cents at $30.14. So we'll be rolling a lot of people over from this September contract to the December today. If you're working with us on the trade desk, I'll be probably reaching out to you via call or text, and we can start to implement a plan on that. Looking at October platinum, up $10 at $9.76, and finally that December copper up 2 at $4.26. Some other standouts: the dollar index slightly higher, but really it's crude oil building on a 2-3 day rally here now, up about 2.25%, 76.49. Middle East tensions are really rising, especially in this overnight session and throughout the weekend. Bitcoin slightly higher, 64,000. High was 65,000, and all the equity markets are pushing up just a little bit here. So markets are beginning to embrace the idea of a very dovish Fed during the duration of the rest of 2024. Inflation is trending lower, with agricultural, energy, and livestock prices all trending lower. Now I say that, but realistically, crude oil prices starting to tick back up here. So concerns about the softening of the labor market are surfacing, and if you haven't been following the Metals Minute, we've been really discussing the uptick in the unemployment rate. It's reached its highest level since October 2021. It's important to pay attention to the weekly initial claims data, where we highlight that every Thursday with the expectation. So those have been riding the upper end of the boundary as well. So looking at this week here, it's going to be a very busy economic data release week with core durable goods month over month, and also those durable good orders month over month. Those tend to be a bit volatile numbers, so we'll see how the market reacts to them, but I think it'll just be a hiccup in the market if we do get any kind of volatility. Now this week it is going to be a busy week with the economic data, and we do expect that uptick in volatility. To highlight a few, we've got consumer confidence, we've got GDP, we've got the unemployment claims, we got the Fed's preferred inflation measure, core PCE, that comes out on Friday, followed by University of Michigan inflation expectations, and then speeches by about a handful of different Fed officials. So getting to the CME's Fed Watch tool, we're sitting right now about 63.5% chance that the Fed cuts only 25 basis points, and a 36.5% chance that the Fed cuts 50 basis points. Now I looked at this on Friday, and we saw kind of a big shift here, more towards the 50 basis point cut, and I think it's really those Middle East tensions and some of the Fed speakers coming out discussing where they're a little bit more dovish, saying that, hey, they're really behind the curve here and things like that. So looking at the charts here, dollar index, the downtrend has really supported many of the commodities, along with those prospects of multiple interest rate cuts. So a couple things to highlight on the gold market. The Commitment of Traders report showed that futures net spec and fund long positions, they remain well below the 2020 highs and should continue to attract participants on all the pullbacks. So we get any kind of correction on the precious metals, I anticipate that more people are going to come into those futures markets here, support the 10 ounce, the 50 ounce, and the other size contracts in those metals here. And then looking at the ETFs, people have already really attacked the ETFs. So those are at their highest level since July of 2023. We're still continuing to see a build on like silver ETFs and things like that. And that's what you really need in order to get that breakout, especially on a product like the silver market, up through that 32.50 and then really take off from there. So looking at the charts here, digging in, that silver market finally on my system is it's a trend discovery system, looks at some breakouts and things like that, and identifies longer term trends based on the type of trading that I do, which is more swing trading, position trading here. But finally, the silver market broke to a neutral trend. So it's going to take another move higher in order to break out to a bullish trend. And that level really is about this 30.15 level. So if the markets can hold this accelerated gain here of about 32 cents today, we should see the system flip to the bullish trade here, and then a lot of people will continue to pile into that market as some of the system that I use corresponds with a lot of different algos and other longer term duration type of trend following systems. Now your critical level of support going to be the 50-day moving average. That's on the September contract, still 29.36. Below that, you don't want to see a close below Friday's low, which was about 29.04. That's where we got that reversal back up from the Thursday sell-off there. So I would say that those would be your short-term kind of line in the sand. So if you're going to start stacking positions on in this December contract, yeah, one, you don't want to miss it. So you implement a position on with this breakout that we're seeing, but you'd have your second one closer to the 50-day moving average. And then where you would start to implement risk management strategies would be if we close below really that Thursday low, you would look to take one of those positions off. And then I'd say probably 27.96 is going to be kind of the line in the sand that would take this market back into a bearish trend, and we would retest the 200-day moving average. So it's really important to focus on a plan whenever you're doing any kind of trading. Doesn't matter what market it is. Implement a plan and stick to the plan. Really, it's every trader should have a very simple strategy, couple different things that trigger things that get you in the right direction of the market, and then a couple things as far as position sizing and also, having some key levels to map out on where you would reduce and where you would add to positions as well. That's another difficult thing to do when prices start to break out to the upside. Now looking at a couple other markets here, the gold market, and then finally the copper market. So gold is right there. If you look over the last several trading sessions, we haven't been able to close really once we touch those record highs. We touched the record highs, 25.70.40 on the December contract, but we didn't close there. We closed actually at 25.50, and we haven't really seen a close over this like 25.60 level. So it's going to be real interesting if we can close right here. Today we should see record highs on the gold market. Again, you could use a similar strategy where you'd use Thursday's low as your kind of line in the sand if you're going to kind of jump in a bit late here with a couple contracts. And then finally that copper market, it's hugging the 200-day moving average. It's starting to get a little bit of distance away from it, and it looks like it's going to retest the 50, which is right around that 430 level. And if we break out above there, that market should go more towards a neutral trend. But China hasn't really stabilized as far as their economy, so we might see that be kind of the false breakout. And I think that the copper market is really our canary in the coal mine as far as if we see a significant breakdown on prices there, and then we look at the silver market and silver's kind of holding in quite strong, that's where you'd ratchet up your stops quite a bit, because remember, there's a strong correlation, about a 67% correlation between silver and copper right at the moment here. So that's all I got for you guys. Again, it's going to be a busy week here. If you need anything, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.